Okay, so you want to get a better grasp on the world of money.
Huh. And not just how to spend it.
Let's be real, that part's not so hard.
Mm-hmm.
But the real nuts and bolts, like how it actually works. You fed us some pretty hefty chunks of basics of finance for this deep dive.
Which tells me you're not messing around.
Right.
And let's be honest.
Finance textbooks. Not exactly known for being beach reads.
No, they're not.
But don't worry, that's where we come in. We're going beyond just the definitions.
Yeah.
We're digging into the good stuff.
How money really shapes our world.
From those everyday transactions.
All the way to the global economic stage.
What's so fascinating about these particular sections you've chosen is that they highlight the often overlooked aspects of money.
It's so easy to get kind of caught up in the day-to-day.
Spending and saving.
But to really understand the core functions of money.
That can be a real eye-opener.
Right, because it's not just about buying that morning coffee.
Or that new gadget.
Right.
This textbook dives into the deeper roles money plays.
And frankly, some of it blew my mind.
For example, one of the things is it lists the 4 primary functions of money.
Okay.
One of them being medium of exchange.
Which is really just a fancy way of saying money buys things.
Right.
But it's more than that.
Think about it. Without money, we would be stuck in a barter system.
Yeah.
Imagine trying to trade your way through a trip to the grocery store.
Oh, yeah.
Offering up, I don't know, your handmade pottery for a gallon of milk.
Right. That's exactly what this book uses. It uses a very fascinating example.
Did you know that in a barter system with just 100 goods,
you'd have to keep track of nearly 5,000 price combinations?
Oh my gosh.
Talk about a mental workout.
But with money as a common denominator,
you only need to know 100 prices.
Money, in essence, just greases the wheels of commerce, makes everything,
right,
smoother, more efficient.
See, that's what I mean by eye-opening.
Yeah.
I never really connected the dots that way before.
And that's just one function.
Right.
We've also got money as a standard of deferred payments.
Which sounds very much like something out of a legal textbook.
It does. It does.
But it's incredibly relevant to our lives.
Absolutely.
This function is all about how money makes debt and legal agreements possible.
Think about it. You borrow money today with a promise to repay it in the future.
Money provides a standardized way to measure and settle those obligations.
Could you imagine if we still had to pay our debts in, like, chickens? Or bags of wheat?
Like they did in, ancient times. Trying to calculate interest rates on that would be a nightmare.
Talk about a logistical headache.
I know.
And let's be honest, nobody wants to be walking around with like a pocket full of chickens to pay their taxes.
No.
It really does make you appreciate the convenience of that little debit card.
It certainly does. And this leads us very nicely to money's third function, a store of value.
In a nutshell, money allows us to save for the future.
We trust that the money that we put aside today will hold some value in the future.
Of course, inflation can make things a little tricky.
Right, like stashing a $20 bill under your mattress only to find out years later it can barely buy you a cup of coffee.
Exactly.
But the general concept remains.
It's this ability to store value that allows us to plan for the future, invest in our goals, and even weather those unexpected financial storms.
Right.
Which, let's face it, life throws them at all of us at some point.
Exactly. And finally, we have money acting as a measure of value.
Essentially, money allows us to put a price tag on things,
to compare their worth,
and make informed decisions about how we allocate our resources.
That's a big one. Think about how much easier it is to make choices when you can compare everything using that common unit of measurement.
Right.
And it's not just about the goods and services either.
We use money to value time,
Sure.
skills.
Even intangible things like brand reputation.
Precisely.
Money provides a framework for understanding value.
In a very complex world.
Okay, so we've established that money is a pretty multifaceted tool.
But how do we go from, like, trading seashells and bartering livestock
to this intricate system of currency and banks and digital transactions?
That's where the textbook's historical perspective comes in. And it does a really good job. It doesn't just dive into dry dates and names.
It sets the stage with a fascinating thought experiment.
Almost like a trip back in time to a world without the financial systems that we kind of just take for granted.
Imagine a world where you couldn't just walk into a store and buy what you need.
You'd be stuck trying to find someone who has what you need.
And wants what you have to offer.
Right,
Talk about a major time suck.
right.
So how did humanity ever break free from this bartering chaos?
Well, as you can imagine,
Bartering very quickly revealed its limitation.
as societies grew and trade expanded,
Enter commodity money.
which basically using something that everybody agrees is valuable as a medium of exchange.
Exactly.
Gold, silver, salt, even cattle at some points
Right.
were used as commodity money.
It was a step up from pure bartering.
But as you can imagine, it still had its drawbacks.
Okay. I'm seeing the problem already. What happens when you need to buy something small, like a loaf of bread?
Uh-huh.
You're going to lug around a sack of gold coins.
Right, that's just one issue.
Commodity money, often bulky, not easily divisible, and also,
Subject to fluctuations in value. Remember those gold price swings?
plus, storing and transporting large quantities of these commodities created security concerns.
Which leads us to the emergence of...
Banks, or at least the early predecessors of modern banking institutions.
Okay, now we're getting somewhere.
And the textbook uses this great example of goldsmiths.
So tell me more about that.
Right. So in many societies, goldsmiths, with their secure vaults,
Became kind of the go-to for storing valuable items,
makes sense,
including gold. People would deposit their gold with the goldsmith,
and receive a receipt as proof of ownership.
which, if I'm following you, that's essentially an early form of a banknote.
A banknote.
People started using these receipts as a form of payment, trading them instead of the actual gold,
This, my friend, is the seed of representative money.
where a token or a note represents a certain amount of a valuable commodity.
And it seems like a pretty natural progression when you think about it. Why lug around all that heavy gold when a simple piece of paper will do?
Exactly.
This innovation was a game changer.
It made transactions smoother, far more efficient. But here's where it gets really interesting.
As these early banks, let's call them proto-banks for now,
As they gain people's trust, they realize that
they didn't need to keep all of that gold.
in their vaults,
Hold on, are you saying they were lending out the gold that people had entrusted them with?
that's risky.
Risky, yes.
Ingenious, absolutely. This is the birth of fractional reserve banking.
A concept that forms the backbone of our modern financial system. Essentially, these proto-banks started lending out a portion of the gold they held in deposits.
Effectively creating new money.
Okay, time for a quick pause because my brain just did a backflip. They were creating money.
Out of thin air.
Explain this like I'm 5 years old.
Okay. Imagine you deposit 100 gold coins in our proto-bank
The bank keeps a fraction of those coins in reserve, say 20%.
and lends out the remaining 80 coins to someone who needs a loan. Now, here's the catch. Both you, the depositor,
Yeah.
and the borrower now have claims to those 80 coins.
So there's 100 gold coins, but 180 coins worth of claims.
I think I'm starting to get it.
Exactly.
As long as not everyone comes knocking on the bank's door demanding their gold at the same time.
Right.
A scenario we call a bank run. As long as that doesn't happen, the system can function.
Loans being made, businesses expanding.
The economy humming along.
Wow.
Yeah.
So that's how money creation works.
It's all a carefully orchestrated dance
right.
of trust and risk. But what about today? We're not using gold-backed currency anymore.
Mhm.
What backs the money that we use now?
That, my friend, brings us to the era of fiat currency and the rise of the central bank.
But I think we should save that fascinating chapter.
For part 2 of our deep dive.
After all, even the most adventurous explorers.
Need a break every now and then.
I couldn't agree more. You've given us a lot to process already.
But stay tuned, listeners, because in the next part, we'll be uncovering the mysteries of central banks, fiat currency, and the delicate balance of trust that keeps our modern monetary system afloat.
Okay, so before we took a quick pause,
Yeah.
we were going deep into those caverns of financial history.
We were exploring how money evolved from bartering to commodity money, and of course the emergence of those kind of ingenious but slightly risky proto-banks.
Right.
But as promised, we are now stepping into the modern era, my friend.
A world where gold coins have been replaced by, well, ones and zeros mostly.
Indeed.
We've arrived at the age of fiat currency.
A term that might sound a bit like something out of science fiction.
But it's very much our reality.
Remember how we were talking about those early banknotes representing a claim on actual gold held in a vault?
Right, like a fancy IOU for something tangible.
Oh, sight.
Fiat currency. That takes a leap of faith.
It's not backed by a physical commodity like gold or silver.
Its value, derived from the government's decree, It's fiat.
Think of it like a giant collective agreement.
That these colorful pieces of paper,
Or increasingly, those digital numbers in our bank accounts.
they have value because we, as a society, say they do.
So instead of a claim on a pile of gold, our modern money is a claim on what? Trust.
That's both fascinating and a little terrifying when you really think about it.
I mean, it makes you realize how much our financial system hinges on confidence
Yes,
and stability.
you've hit the nail on the head.
Fiat currency requires a different kind of backing. Trust in the government.
Trust in its institutions.
And, of course, trust in its management of the monetary system.
And this is where central banks enter the picture.
They play a really pivotal role in maintaining that delicate balance of trust. And the textbook dives into the many hats that they wear.
And it's quite a list.
Yeah.
Controlling the money supply,
Setting interest rates.
acting as a lender of last resort to banks. I mean,
Wow.
they seem like the conductors of the entire financial orchestra.
A very apt analogy. By controlling the money supply and setting those interest rates,
Central banks aim to,
keep inflation in check,
Yeah.
promote economic growth.
and of course, maintain financial stability.
It's a delicate dance, constantly adjusting those levers and dials to keep the economy humming along.
I imagine it's like trying to steer a giant ship in, constantly changing waters.
One wrong move, and bam, you're headed for the rocks.
An apt visual.
And speaking of navigating complex systems,
The textbook also delves into a topic that tends to make even seasoned economists reach for a strong cup of coffee. The balance of payments.
oh, yeah, that was a whole section highlighted in the margins.
And honestly,
Yeah.
at first glance, it does seem a bit dense.
But you're telling me this is something we should actually care about.
Absolutely. Think of it this way.
We've been talking about the inner workings of money.
Yeah, within a single country.
The balance of payments,
Uh-huh.
this zooms out to the global level.
It's a record of all the economic transactions between one country and the rest of the world,
Okay, so like a giant spreadsheet.
tracking every import, every export, every investment.
Exactly. And it's divided into two main accounts. The current account?
And the financial account.
Okay.
The current
That
account.
focuses on the flow of goods and services.
Your morning coffee beans imported from Colombia.
The software developed in Silicon Valley and sold around the world.
It's amazing to think about how interconnected everything is.
Oh, it truly is.
Now, the financial account.
Yeah.
That tracks the movement of capital,
Yeah.
investments, loans, that sort of thing.
So if a company in your country decides to build a factory overseas,
That would be reflected in the financial account.
and all of this movement of money, goods, services,
Right.
it's got to balance out somehow, right? That's where the imbalance of payments comes in.
Exactly. Now, achieving a perfect balance,
That's rare.
and often it's not even desirable.
But the balance of payments gives economists and policymakers a valuable snapshot.
A snapshot of a country's economic relationships with the rest of the world,
It's like a national economic report card in a way.
showing where a country is earning its keep, where it's spending, and whether it's living within its means.
On the global stage, of course.
Precisely. And, it's not just about, dry economic indicators.
The balance of payments can actually reveal a lot about a country's economic strengths
Its weaknesses, its reliance on certain industries.
and its overall financial health.
So for those of us who aren't economists or policymakers, why does this matter?
Because understanding the balance of payments helps us make sense of,
Those news headlines about trade deficits,
currency fluctuations.
even the impact of global events on our own economies.
It reminds us that we're all part of a larger interconnected web.
It's a good reality check.
Yeah.
We're not just individuals making isolated financial decisions.
Right.
We're all part of this intricate, constantly evolving dance of money that spans the globe.
But let's zoom back in for a moment. From the global stage to the national level.
We've talked about money.
Like central banks. But what about the role of government in all of this? Where do they fit into this financial tapestry? We've been on quite a journey, haven't we? From the barter systems, chaotic swap meets, to the rise of central banks as these conductors of our modern monetary orchestra. But there's one more player we need to bring into the spotlight, and that's the government.
Yes, the government. The government's role in the economy is often a topic of much debate.
Mhm.
But let's bring it back to, this textbook that you're diving into.
It highlights three key functions of government in the economic sphere. Redistribution,
And-
stabilization.
And before anyone tunes out thinking this is going to be some dry economics lecture, I promise it's far more interesting than it sounds.
Because it's really about how the government influences the flow of money, resources, even opportunities within a society.
Right.
So let's start with allocation.
Okay.
In essence, allocation is about the government deciding how to use its resources.
Think, building roads and bridges,
Right.
funding, education, and healthcare.
Maintaining national parks.
Yeah.
These are all things that benefit society as a whole, but they might not be, profitable for private businesses to undertake.
So it's about filling in those gaps where the free market might fall short, right?
Exactly. The textbook, it talks about public goods.
Things like street lighting
Right.
or national defense.
Where it's difficult to kind of charge individuals for their use.
These are often best provided by the government,
Makes sense.
funded through taxes.
To ensure that, everyone benefits.
Right, which kind of ties into that second function, redistribution.
It's a bit of a loaded word, but essentially it's about the government trying to create a more equitable distribution of wealth within a society.
Right. Think about programs like, Social Security, unemployment benefits.
Food stamps.
Right.
These are all forms of redistribution.
The government collects taxes, primarily from those with higher incomes, and then redistributes those funds to support those in need.
Now, the textbook does acknowledge that this is a bit of a tricky area.
There are a lot of different viewpoints on how much redistribution is quote-unquote fair, or even effective for that matter.
It's a balancing act, and the textbook really does. It presents a range of perspectives on this.
From those who, believe in a smaller government role,
To those who argue for more robust social safety nets.
it's really about, finding that balance.
Between individual responsibility and collective well-being.
Okay. And speaking of balancing acts,
That brings us to the government's third function, stabilization.
stabilization, okay.
Stabilization is all about managing the overall kind of health of the economy.
Think of it like keeping the ship steady in those choppy waters.
Right, right.
The government, often working in tandem with the central bank,
Uses fiscal and monetary policies to, control inflation
employment.
and encourage economic growth.
So it's like this constant game of adjustments, using tools like taxes
Bending
True.
rates.
to try to keep the economy from overheating or stalling out completely.
Precisely.
And one of the key tools
In the government's stabilization toolkit.
is, of course, taxation.
Ah, yes, taxes. Those often dreaded but absolutely necessary mechanisms for funding all those government functions that we've been talking about. Now, the textbook, it goes pretty deep on the different types of taxes,
Income
Yes.
tax,
Yeah.
sales tax, and it can get, I'll be honest, it can get a bit technical.
It can. But what's really important to remember is that taxes are more than just a way for the government to, raise revenue.
They also influence our behavior.
Right. Like those taxes on cigarettes and alcohol, they're designed to discourage us from, well, maybe not us specifically, but people in general, from consuming too much of those goods.
Exactly.
Taxes can be used to promote certain activities,
Yeah.
discourage others.
And even, redistribute wealth to some extent,
So it's not just about how much we're taxed.
but also how we're taxed. And the textbook uses this term deadweight loss to describe how even the most well-intentioned taxes can actually have these unintended consequences on the economy as a whole.
Right.
So it's about finding that sweet spot.
Yeah. Where taxes are sufficient to fund the necessary government functions without stifling economic activity completely.
A delicate balance indeed. And, this entire discussion
Mm-hmm.
about money and banks and central banks and the government's role,
It really all boils down to one fundamental element: trust.
that word keeps popping up, doesn't it?
It's like the invisible glue that holds this entire system together.
Think about it.
We trust that the money in our bank accounts will have value tomorrow.
Right.
We trust that banks will handle our deposits responsibly.
We trust that the central bank will, maintain a stable currency.
And, of course, a healthy financial system.
And to varying degrees, of course, we trust that the government will use its power over the economy wisely.
It's a complex web of trust, isn't it? And
Yeah.
it makes you realize that understanding the world of money, it's about so much more than just like balancing a checkbook or investing in the stock market.
Right.
It's about understanding the institutions and the history and the social contracts and yes, even the psychology that shape how we value and exchange goods and services.
It's a fascinating area of study,
Full of complexity.
constantly evolving.
Well said. We've explored a lot in this deep dive.
We've journeyed through the history of money,
Unpacked the inner workings of banks and central banks.
grappled with the balance of pain,
Even ventured into, the world of government economic policy.
and through it all, we've really seen how money, in its various forms,
Is more than just, a means of exchange.
it's a reflection of power, of these intricate relationships that bind societies together.
Absolutely. It's been quite a ride. So, to our listener out there, we hope this deep dive has given you a fresh perspective on, the often overlooked complexities of money.
And perhaps sparked your curiosity to,
Explore further.
delve deeper into this fascinating world of finance and, of course, the forces that shape our economic landscape.
Because whether we realize it or not,
Money touches every aspect of our lives.
understanding its nuances, I think, can empower us to make more informed decisions.
Right.
Both for ourselves and really for the world around us.
And who knows?
Perhaps someday you'll be writing your own chapter.
In the ever-evolving story of money.